Well, it's turning out to be a better day. At least there's a bit of a green on the screen and actually quite substantial. The Nifty has managed to recover almost 150 points from the lowest point of the trading session, and that despite the fact that India VIX continues to inch higher. In fact, India VIX is almost at that 19 level ahead of the Fed meeting, which is lined up. Then you of course have the union budget. There is state election in Delhi as well as the RBI meeting lined up in the coming weeks. The next 10 days are going to be very hectic with respect to news flow. Having said that, in terms of the market mood right now, it's IT which is leading the sectoral gainers. KPIT Tech came out with a solid set with respect to the guidance upgrade on the margin front. That's getting a thumbs up from the street. That stock earlier was holding on with a gain of around 10%. Autos are in top gear today. TVS Motors, after that 6% rally yesterday, is seeing another uptick of 7%. That margin beat, that thumbs up from brokerage, all of that is actually playing out. Bajaj Auto, a decent set, and Exide, while the numbers optically look a bit skittish, the fact that the stock has tanked quite a bit is something which is supporting the sentiment. Talking a bit more about autos, Maruti just came out with the earnings and profitability was a bit of a miss versus expectation. So that's in a bit of a red zone. But from the broader market, a lot of green on the screen today. Syrma SGS has bounced back quite sharply after its earnings. Ami Organics, with the management upping their guidance, is in the green. Car Trade has seen a good result. Ixigo is in the green. Deepak Fertilizers, Inox Wind. These are some of the result reactions as well as the stocks and news. And clearly, Cheryl, it's the broader market strength which is quite interesting today.
Absolutely. Broader market strength is pretty interesting, and given the fact that that particular space was actually pretty much bruised over the last couple of trading session, a very healthy bounce back coming in for the broader markets. In fact, they're outperforming the benchmark indices by a margin in today's trading session. Some of the other stocks also that you need to watch out for. Remember, ITC Hotels, that demerged entity, has listed in the bourses today. It did list at a tad bit of discount. Let's take a look at what ITC Hotels is doing in trade. Apart from that, like you had Anisha mentioned about KPIT Tech earnings performance, and that's the reason why that stock is in focus. Viatech Vabag is the other counter that is in focus in trade today. They bagged an order, and on back of that, you have Viatech Vabag that is surging about 9% or so. But yes, you cannot take your eyes off the screen when you talk about the broader markets, and we have our guests also standing by patiently to talk about the markets and what exactly the move means. We have Kunal Bothra as well as Deepan Mehta joining us on the show. Very good afternoon to both of you. And I'm sure, Kunal, you're also supporting green like the way how Deepan is by wearing green shirt today. Green on the screen, are you happy or no, Kunal?
As I said earlier, that any kind of green, light green, dark green, any kind of green is good for the markets, because after so many days of red, I think it's good to see that the markets are stable. So, but I think today's day is more of so even if the India VIX is at 18 plus levels, we have not seen the usual volatility like what we've been witnessing over the last many days of this sell-off. So large caps have been showing signs of stability. Mid caps have seen follow-through price up move in a very good recovery from their oversold territories or sharp corrective phases. So I think it's a different day altogether for the markets. We may not be able to compare this with the previous maybe last 1 or 2 weeks, but this could probably be just an indication that maybe the markets are trimming off positions on the short side. We saw the data on the FII over the last 2 days, specifically yesterday, where cumulatively over the last 2 days there has been almost like a 10% reduction in the net short positions for the FII, and more importantly, there have been more long additions which have happened for the index futures contracts as well as for stock specific futures. So that indicates that the bias is now shifting from a deep negative pessimistic scenario to maybe some bit of stable scenario, at least going into the expiry as well as the budget event.
Okay, so that's the take coming in as far as the market setup is concerned, and yes, we'll take any shade of green right now. But Dipan, what's your view on the market? Which are the pockets that, let's say, you've started buying into or you're looking to buy?
Yeah, good afternoon. Thank you for having me on your show. Why do we assume that we have to always buy? The question could be, which are the pockets you're thinking of selling? See, this is the thing which is happening in the market, that everybody wants to look for buying opportunities, but clearly we have a structure in the market which has got damaged very badly. We have got major threats in terms of Trump, in terms of a sharp slowdown in the earnings. I think nobody is looking at that at all. This earnings season is amongst the worst I've seen in several quarters. At the same time, we have a GDP slowdown. We have a budget which is uncertain. Hopefully, they won't raise any taxes over there. And there is very limited leeway for the RBI to reduce interest rates given the inflationary scenario. So there are so many battles we are fighting on so many fronts, and why should we just always think about in terms of buying? You think? I would say that the sectors which are still worth selling are commodity companies. Any high PE company trading at 70, 80 times, which has disappointed in the earnings, that is a sell even if after it has dropped by 20, 30% or so. And let's just keep buying away for the time being. It's not reached those levels. They will do soon. I'm sure they will at some point of time, but I think there's a lot more pain left in the market. And rallies like these are good opportunities to lighten up your position. And if investors have got margin trade funding, leverage positions in F&O, then I would say that they're on a very, very sticky wicket.
Any of these names that you want to give when you talk about the ones that you should lighten positions on?
Well, I think investors can do their own judgment call. As I said, I think first of all commodities, cement, steel, they've disappointed big time. Those are the ones I want to, completely exit. We never had them in our portfolio, but investors still have them. And a lot of new listings which have taken place, right, in electronic manufacturing services, to an extent, solar equipment, even some of the renewable energy companies, businesses linked to electric vehicle. All of these, I think you need to review. They're great businesses, no doubt about it. Great companies also have created a lot of wealth in the past. But look, they are highly, highly overvalued, and one needs to look at opportunities to exit over there. I would add FMCG also to the list. You've seen major disappointment likes of HUL, Godrej Consumer, Imami. I mean, the list goes on and on. There's a massive structural slowdown as far as FMCG is concerned. So I think that by and large, we need to be extremely careful of which stocks you have in your portfolio.
Right, so that's the take coming in on which are the sectors or segments that you can actually be wary of at this point in time. Kunal, what's your view then when it comes to the metal space? Are you liking the space right now? Or do you think, or you concur with the view, the time to lighten your positions over there?
So maybe selectively, I think few metal stocks are showing signs of bottoming out, and this could probably turn out to be more of a temporary bottom. But even if that happens, I think at least the sell-off in the metal stocks of few of the metal names, I think that should recede significantly. So what we've seen is, for example, Tata Steel, a stock which was one of the first ones to sell off from the entire metal pack, I think 6-8 months back, from 180 or 84, which is the high for Tata Steel, towards a point where the stock was sub 120 levels. We're seeing ample evidence that the stock has shown signs of a critical bottom formation. The indicators were deeply oversold, and now what you're seeing is a shade of a strong recovery coming back into the stock, and this has trickled to the other stocks in the metal pack, where you've seen JSW Steel, which has been a more stable or a slight moderate beta stock from the entire metal pack. Also trying to find its feet back again. The stock has recovered 4 to 5 percentage points from its previous swing low. So when you have such kind of data points, it just indicates that maybe all is not gloomy for the entire metal pack, and you might probably expect few of the stocks to try and outperform or at least give a counter rally.
Okay, let's see whether that counter rally really happens or not. But today there was a bit of a surprise with the ITC hotel listing being a bit of a muted kind of performance versus the expectation. Given the market mood today is quite buoyant, one would have assumed that perhaps that stock is likely to see a green uptick. In fact, we did catch up with the management, Mr. Sanjeev Puri, to understand what the way forward is for ITC hotels. But before that, Dipan, your take as far as ITC hotels is concerned, and do you think there's going to be a bit of a pair trade with Indian hotels versus ITC hotels now with the new competitor?
Yeah, I think it's a good development. You have one more nice hotel company, large size, well diversified, to look at investing. And certainly hotels have it a purple patch. Next few years also look very interesting for these companies, considering that fresh capacity takes time to build up. So I think certainly we'll be looking at ITC hotel in positive light, as in valuations at reasonable levels. But look, Indian hotels, the kind of strategy they have, and the kind of momentum that it has picked up, and the kind of new openings which are expected, and the way they've been able to get higher revenue per room and increase the capacity has been phenomenal. I think I've been watching Indian hotels for the last 30, 40 years, and it seems to have entered a fabulous new growth phase. And that's reflected in the very high P multiple as well. So I would say that amongst all the listed hotel companies, our favorite still remains Indian hotels. As an investor, I would remain invested, pretty happy with the numbers and other thing, and always a bit concerned about the high valuation. But these are the stocks, maybe Indian hotels, you could look at if it's down 25, 30% from these prices, then it's a reasonable valuation. You could look at making a fresh entry or adding to your positions?
I think as shareholders, they should look forward to tremendous growth in this sector. I think it's a sector that has immense opportunities. But let me also add to this that for us, our whole legacy and ethos and our success, I think, is founded on the whole principle of creating stakeholder value. Value for our customers, value for society, value for employees. When all of them win, then ITC Hotels wins. So that's the philosophy. That's the philosophy we will build on. And naturally, this is also going to create economic value for all participants going forward.
Now ITC Hotel demerger is done. What next for ITC? What should overall shareholders of ITC expect now after this step is done? Are there more on the anvil?
So you see, I have often said, and of course, it is in the media that I get this question more often than anywhere else. So that, the context of structuring depends on business strategy, the competitive context, the opportunity, the business maturity, and we look at the pros and cons of either of the options.
Welcome back. You're watching Closing Trades right here on ET Now. We are building on the gains when you talk about the benchmark indices, 0.8% uptick coming in for the benchmarks. You have the broader markets. They are the star performers in a trade today. We also have Shrikant Chauhan joining us on the show. Good afternoon to you, Shrikant. And yes, we did speak about broader markets as well as the benchmarks a while ago. But let me take your view. What exactly is happening in the banking space? Because they've been actually pretty upbeat in trade today, outperforming the benchmark indices at one point in time. Now it's in line with benchmarks.
Yeah, good afternoon, everyone. I think, for Nifty and Bank Nifty, I think, Bank Nifty is actually supporting to the broader market. And we are seeing consistent upward activity since the last 2 days in Bank Nifty.
Shrikant,
Today
on
it
a
is like
bit of a patchy line. We'll try and reconnect that and get that understanding better. But Dipan, just wanted to deep dive with you on the auto sector a bit more because it was going through a bit of a headwind. That festive season sales weren't strong enough. Now with the earnings coming in, at least on the margin front, a couple of companies have surprised. We're waiting back for Tata Motors earnings as well. But how are you looking at separating the men from the boys within the auto pack?
Yeah. Am I audible?
Yes, Dipan, you are. Go ahead. Okay, Dipan as well has seen a bit of a technical glitch. I think the telecom sector clearly needs to be in focus with respect to the kind of tech issues that we are facing on the bandwidth front. But Kunal, I don't think that can be the case with you, given the fact you're with us in the studio. Your sense as far as the EMS space is concerned, because does it give you the sign that it's bottomed out?
Yeah, it seems like, because that final phase of sell-off which had happened the last 3 days, yesterday specifically, where many of these stocks, they were down 15%, 10% on average, so double-digit, sell-off into these stocks. And look at today's price action for many of these names. I think many of these stocks are showing like a V-shaped recovery, the entire EMS space, and I think that's a very strong indication. So then the second technical feature which you look out for is that what are the volumes, what are the set of volumes which have happened on both those days when the stock opens with a gap down, falls lower, down 10, 15, 20%, and then on the next day of recovery, if the volumes on the day of recovery are much higher than the volumes which the stocks have shown when they're fallen lower, that indicates that there's been renewed buying which has happened to these spaces. We also look at the fact that many of these stocks have come back above their respective 200-day moving averages. For example, Sirma SGS, you've seen Keynes Tech, PG Electro Plus. I think many of these stocks have come back above their respective 200-day moving averages after staying below this level for the last two days or so. So that again is a strong indication that a major bottom is now in place. And when you typically see such kind of V-shaped bottoms being formed, we expect that these stocks, they generally get into a much more further uptrend over the very near term at least.
Point taken. So that's the view on the EMS space, but I think we do have Dipan back with us. Dipan, you were making the point about the auto sector.
Right. I think that, the problems which are plaguing the auto sector, that being slowdown in sales and higher discounting, that has not, I mean, completely dissipated. So you could expect one or two more challenging quarters as well. And look, I think there's only so much the company can grow by improving the margins. End of the day, the top line has to kick in. And one could be a bit selective. Actually, I'm looking forward to numbers of Eicher Motors, which the volumes also have improved significantly. And it's been a laggard in the auto sector for the past several years or so. And they have been working very hard at improving exports and launching new models and trying to improve their volumes and realization. So this could be a kind of an outlier within the auto space. But other than that, I mean, I would like to be equal to slightly neutral, neutral to underweight auto. And also looking forward to M&M's numbers. I think that could also be an interesting beat over there. So these are the two companies within the auto space which I would bet on. And as a measure of disclosure, we and our clients are invested in it. But even in these two companies, don't expect superlative returns. I think it's just that within the auto space, they may do slightly better than the rest.
Right. Dipan, I wanted your view on the entire defense pack. Where do you see this one headed going ahead? Do you think that now with this correction that has already creeped in, now we'll have the budget, we may get to hear something about the defense allocation as well. And given the fact that the government has been having the thrust on the self-reliance, Atmanirbhar Bharat in the entire sector as well. Do you think after this fair bit of correction, it's time to look at the defense space?
I think let's just give it some more price-wise, time-wise correction. I think my assessment is that you will have more of time-wise correction as far as PSU defense is concerned, and you may have an actual price-wise correction of 25-30% also as far as private sector defense companies are concerned. So whichever way I look at it, I think I just want to wait and watch as far as PSUs are coming. Especially as far as defense is concerned, especially considering that there's good order visibility. At some point of time, they'll become interesting in terms of investment because they have the earnings visibility. But it's just that you're paying far too high a valuation and P multiple at this point of time. And the numbers are coming through. So even if the prices remain the same, the P's will contract purely on account of improvement in the earnings. And you will reach a nice position, I think, a few months, maybe 1 or 2 through 3 quarters from now, where the P's are at very, very reasonable levels, slightly cheap also. Plus, you will have earning visibility, and that's, I think, is the right entry point. So it's a wait and watch. I'm certainly not taking the plunge even after such a massive correction. I just feel that some more price or time-wise correction is left in it.
Shrikant, what's the take on the IT pack? Has made quite a bit of reversal, and especially the beaten down names like KPIT Tech, which weren't moving with the large caps earlier, are now reacting quite sharply. Even Persistent and others post earnings have seen quite a bit of comeback. What do you like now, large cap IT or mid cap IT, and what names?
Yeah, I think if we consider these IT stocks, then in that all these mid-cap IT companies, they are really doing well. Most of these stocks are forming continuation formation after correcting when the market was correcting, and now after the result, stocks like Coforge, Persistent, they are really doing well. And I'm of the view that we should look for adding these stocks to the portfolio instead of adding large cap companies, at least for the next few days, because for next few days, I am expecting market to remain volatile. But in that, if we see any specific momentum sort of activity in any particular segment, then mid-cap IT stocks should do well. In that, of course, we like Coforge, which is currently around some 8770 sort of levels. There, we should look for adding long positions. I'm expecting this stock to move towards the levels of at least 9400, 9500 in next maybe few days. And here the stop loss, the risk reward ratio is quite favorable. We can keep stop loss somewhere close to 8500. We also like Persistent System, where the stock is trading at 60 to 50. Currently, it is up by 5.5%. But the entire formation is indicating us that the corrective pattern is completed, and now the stock is heading higher. So the next level to watch out for would be somewhere close to 6700 again. So broadly, yes, we are bullish on all these mid-cap IT companies.
Shrikant is pretty bullish on that one. On that note, thank you so much, Deepan, for joining us on the show to talk about the various sectors that you should look at or you should not look at this point in time. Thank you so much for sharing your views. But Kunal, let me come to you and get your closing trade picks for our viewers.
So L&T Finance is a very interesting chart. The stock has been confirming breakout above 140 mark, And apparently over the last 1 week, the stock was less volatile as compared to its other peers. Looks attractive, and the stock confirming a breakout today on the back of higher volumes. Would look out for buying the stock with a potential target in the near term, at least around the 150 to 160 range.
Shrikant, what about you? What's your closing pick?
Yeah, I think see at these levels, uh, there are like number of stocks which are breaking out of their consolidation sort of formations. In that specifically, we like Apollo Hospitals, which is currently trading around some 6,700 sort of levels. And from here, if we see the upward activity, then the stock can move towards the levels of at least 6,700, 6,900. So currently it is at 6,780. We can keep stop loss at 6,700. And the next level to watch out for would be 6,900 to 7,000. The stock is forming higher bottom sort of formation, so it's a buy. We also like Trent, and Trent is like currently at its important support levels. It was correcting from the highs of 7,400 to almost 5,400 levels. And if we see the entire pattern, then it has been corrective sort of pattern. And now after completing the levels of completing the correction at 5350, 5400, the next level to watch out for would be again 6,000. At this level, it's a buy. The risk reward ratio is quite favorable with a stop loss close to 5350.
Point taken. That's the view coming in. News at the bottom of the screen. This is something that we had highlighted, the possibility of raising the ethanol production as well as the pricing. We'll get you more details when we come back, but overall the procurement prices have increased. For what kind of, sugar, which molasses and all of that, we'll get you those details shortly after this break.
Was announced by Finance Minister in the budget as well, sir. By when can we expect some kind of deliverable outcomes of this mission, and is there a breakup? What will be the use of this 16,300 crore? Which part of the mission will go for what, sir?
बहुत अच्छा प्रश्न है. पिछले बजट की स्पीच में नेशनल क्रिटिकल मिनरल मिशन की अनाउंसमेंट हुई थी, और जैसा आप जानते हैं बहुत ही कंसल्टेटिव प्रोसेस से इंडस्ट्री, स्टेक होल्डर्स, स्टेट गवर्नमेंट्स, जो साइंटिस्ट और CSIR की लेबोरेटरीज हैं जो इस पे काम करती आई अब तक, उन सब को कंसल्ट करने के बाद में, और विशेषकर जो अनुभव अब तक एक आपकी वो कौन सी संस्था है जो विदेशों में विदेशों में जो एक ऑर्गेनाइजेशन काम करता है, काबिल, उनके और उन सब के अनुभवों को लेने के बाद में ये मिशन आज डिक्लेयर हुआ है और अप्रूव हुआ है, और ये इमीडिएटली काम में लग जाएगा. इसका इम्प्लीमेंटेशन मैकेनिज्म भी पूरा क्लियर हो गया है. कैबिनेट सेक्रेटरी साहब के चेयरमैनशिप में एक मिशन की स्टीयरिंग कमेटी बनेगी. वो स्टीयरिंग कमेटी में सारे स्टेक होल्डर्स को शामिल किया गया है, और जो मेजर PSUs हैं उनको भी इसमें शामिल किया गया है. और ये 16,300 करोड़ रुपीस का जो बजटरी एलोकेशन है, इसके अलावा 18,000 करोड़ रुपीस का PSUs के माध्यम से फंड रेज किया जाएगा. 18,000.
Okay, so that's the latest announcement coming in from the cabinet. Of course, there have been changes made to the sugar prices and the ethanol prices, the approved rates, and the National Critical Mission is getting another leg up with the kind of allocations that the minister was laying out. In fact, you can see the reaction in some of the stock prices. Gujarat Mineral Development Corporation has suddenly seen a bit of a spike. So some of these mining companies seeing a bit of a reaction at this point of time. On the losing side, however, I think some of the sugar companies are coming under pressure. Maybe that increases may be lower than expected, and in some of the categories there hasn't been a major price hike. That's the reason some of those stocks were just sideways over the last few minutes. But Siddharth Khemka is also with us on the show. Siddharth, hi, good to be speaking with you. What do you make of the market setup right now? Do you think the bulk of the poison is out of the system, or do you think there's going to be another couple of weeks of volatility, and it's only perhaps at the end of next week, after that Delhi election outcome, etc. is out, that the market will finally stabilize and pick up a direction?
Manisha, I think if you look at the major worry for us from the market perspective is the earnings, and that has been something which has been a bit subdued, and I would say only until the end of the result season we could see some stability. Based on whatever numbers that have come so far and the outlook for Q4, even Q4 doesn't look to be a very strong quarter. For this quarter, our expectation was about 5 to 6% Nifty earnings growth, and for the full year FY25, again there is a earnings expectation of about growth of about 5 to 6%. So Q4 could see even a lower number in terms of Y-on-Y growth. I think that until that is gone, market could remain in a consolidation mode. There is a big event of budget over the weekend, and then we have the RBI meeting followed by the Delhi state election. So a lot of events are lined up which will only induce volatility in the short term. Markets have corrected almost about 13% from the top. We see some semblance coming back, especially in some of the large cap names, which we prefer in this volatile environment. Also, based on the announcements that the government could do in the budget, several sectors linked to the economy, core industrial economy, that could be in focus from a near-term perspective. Having said that, from a medium-term perspective, we believe this year we could see some of the themes linked to the export recovery, export revival, for example, pharma, IT, that could do well. Demand has been pretty strong for improving trend that we are seeing in the technology space, especially from the US, where the interest rate cut has happened, and the new administration is also talking about the income tax cut. So that could also support discretionary spendings on the tech front. That should be positive. Pharma is another space that is looking better in terms of earnings growth. This would be the fifth or sixth consecutive quarter of strong earnings growth from the pharma space, healthcare space. And I think not only the domestic business is doing well, even the key exports market of US, Europe, there we are seeing sanity coming back, realizations improving, demand coming back, and hence the kind of good recovery that we are seeing in these pockets.
That's about the pockets that are looking good, given the fact that you have that big important event also near the end of the week. It's a Saturday, February 1st. You have the union budget. A lot of sectors to watch out for, and Siddharth did highlight a couple of the sectors that we have to watch out for on back of that. Also, Siddharth, I wanted to get your view coming in on the life insurance companies in particular, because given the fact that you have a lot of murmurs, a lot of chatter on the fact that there could be some rationalization or some rejig being done in the income tax slab. So on back of that, what's your take when you talk about this life insurance companies, given the fact the government has been pushing for a lot of them to shift to the new tax regime as well?
I think there was a lot of hopes around earlier with the GST Council meeting that the tax on insurance would be brought down. That has not happened. And this time around, there is again a lot of chatter that we are hearing that the government should increase the exemption limit under Section 80C, which has not been changed for past several years. So if that were to happen, and as you rightly highlighted, in the old regime, because the new regime doesn't have any of these clauses of ATC. I think there could be a case where the government could increase marginally the exemption limit in the ATC from about 1.5 lakhs to 2 lakhs. That could incentivize more savings in this environment. But clearly, the government looks focused to shift gradually to the new regime where you have a blanket rate and there is no sub segments or sub exemptions clauses. So it's a difficult call. Jan, Feb, March, JFM, as we say, is a big month for insurance. So I would believe that if it doesn't come, there is not much negative. But if it comes, it could be a big positive for the insurance companies, especially in the JFM period.
So that's the take coming on the space. But let's talk about the cement sector, especially Ambuja Cements, because it's come out with their Q3 earnings. We have the whole-time director and CEO Ajay Kapoor helping us break down numbers for Ambuja Cements in the quarter gone by.
I'm delighted to present Ambuja Cements' strong financial performance for Q3 FY25. Ambuja Cements has delivered steady performance, supported by cost leadership, improved efficiencies, and growth. For the Q3 YOY, the consolidated performance our revenues were up at 9,329 crores, operating cost at rupees 4,618 per ton. This is mainly on account of the reduction in energy and freight and forwarding costs by 7%, driven by our efficient fuel management and strong focus on green power. We achieved a 10% reduction in kiln fuel, now at rupees 1.66 from the previous rupees 1.84 per 1000 kilocalories. Our green power share has gone up from 15.8 to 21.5%. The freight and forwarding costs have gone down by 6% from rupees 1,322 to rupees 1,239 per ton. With these improvements in cost, our EBITDA is rupees 1,712 crores. The EBITDA per ton now stands at rupees 1,038 and margin at 18.4%. The PAT stands at rupees 2,620 crores. Our consolidated cash and cash equivalent at the end of 31st December 24 remains at rupees 8,755 crores. On a standalone basis, net revenues at rupees 5,043 crores with a 24% volume increment at 10.1 million tons. Our EBITDA is rupees 601 crores. EBITDA per ton is at 595 and margin at 11.9%. PAT of rupees 1,758 crores. Coming to strategic investments and expansion, our current capacity is at 89 million tons, and with ongoing expansions and post-successful completion of Orient Cement transaction, our capacity will reach 104 million tons by Q4 FY25. Our capacity will further go up to 118 million tons by FY26, reflecting an increase of 51 million tons, which is 76% growth in 3.5 years after becoming an integral part of Adani Group. Our acquired assets enhance efficiency, resource utilization, and sustainability. With an expanded footprint across peninsular India, captive jetties, and more bulk cement terminals, we have strengthened our marine logistics. Digital innovation and reducing lead distances will reduce logistics cost and emissions. We have commissioned 200 megawatt of solar power in Khavda, which will further reduce our power cost. Our goal is to reach 1 gigawatt of RE, including wind and solar, with an investment of rupees 10,000 crores.
Okay, so that's the latest coming in from Ambuja Cements. But Siddharth, what's your take as far as cement as a pack? In fact, before I come to you, Siddharth, let me take it across to Shrikant to get his sense. Shrikant, on the charts of the cement companies, which are the ones that look better to you?
Yeah, I think, see, like in this particular space or basket, we like Ramco Cement, we like Ultratech Cement. Both these stocks are showing a lot of strength. In fact, Ambuja is like it's still finding a lot of difficulties to sustain at higher levels. So we may see some more consolidation in the near term. But Ultratech Cement, based on technical, looks really strong. It is like forming a higher top, higher bottom series, and it has been like consolidating since last almost 7-8 months. But based on its technical formation, I am of the view that the stock is on the verge of crossing 12,000, 12,100 levels. We also like Ramco Cement, where the stock is currently quoting at 927, and based on its long-term technical pattern, it is forming some bullish continuation formation. And there also I am expecting stock to move towards 1,040 or maybe 1,100. So both these stocks are really showing a lot of strength on charts. In fact, the entire space is doing well, but few of them are really good.
The cement space when it comes on the chart. Siddharth, let me come to you and ask you the question on cement space, given the fact that quite a lot of consolidation is already at work in that particular space. You have reports suggesting that Ultratech also is looking at another company now to acquire. What's your sense in the cement pack, and where will the leadership emerge? Because you have these two groups that are actually eyeing a huge share of the pie.
of consolidation has happened both in terms of the industry as well as in terms of the demand. We are now seeing Ultratech that announced its numbers last week, and now JK Cement 2 days back. We are seeing volume growth returning, and that's a good sign. The only thing is realizations are still not up, and we have heard news flows in the month of December that most of the companies have started taking price hikes in the range of 10 to 15 rupees per bag. So what again we are witnessing is that there are signs of recovery in the cement demand across sectors, be it housing, be it infrastructure, and both rural as well as urban. Plus a good monsoon that is estimated to drive demand, especially from the rural sector. And we have the upcoming budget where again this year the government spending has been low, but there are expectations that the government will now go and overdrive next year and should target about 10 to 15% growth in their capex spending, which should also be positive for the overall cement space. Now, coming to preferred ideas, we definitely like Ultratech, which is our preferred pick. They have reported very strong numbers, and we also expect improvement in profitability in Q4, largely led by cost savings. So it's a market leader and consistently doing well. We expect a revenue CAGR of almost 18% and PAT CAGR of 32% in Ultratech, which is our preferred pick. We have a buy rating and a target price of 13,800. The second stock that we like is the mid-cap space, JK Cement. The company also delivered strong, healthy operating performance. Volume was good. The company has a good mix of grey as well as white cement. And within the, you can say the tier 2 kind of cement companies, JK Cement remains one of our preferred ideas. It is consistently gaining market share in the premium products. Plus, we are expecting 8 to 10% volume growth in the fourth quarter and about 10% volume growth in FY26 for JK Cement. Again, we have a buy rating and a target price of 5,630 for JK Cement.
Point taken. That's the take coming in as far as cement pack is concerned. But some of these new age tech companies are clearly bouncing back today. Zomato is showing quite a bit of strength. There's Paytm, which is doing quite well in the trading session. Finally, some of these names are finally getting out of the woods. Kunal, on the charts, is there meaningful strength in these names, or there are other pockets which look better?
No, I think there are other pockets which are looking better because, for example, Zomato, even if the stock is up some 6-7% today, the volumes are almost at stagnant to the volumes over the last 2-3 days when the price was going through a sharp correction. Generally we, if we expect the stock to get into a counter rally, the volumes have to be almost 2x, at least 1.5 to 2x of the volumes or the average over the last 3 or 4 days when the prices go into a selling spree. So if that doesn't happen, which means we expect that the stock price recovery, even if it happens on a higher magnitude of price scales, may not be sustainable, and you might eventually see these stocks going to a correction. So I think that's why I think one needs to concentrate on stocks which are moving up specifically on the back of higher volumes.
All right, so that's the strategy that you should adopt when you talk about investing in markets at this point in time. But Kunal, before we wind down for trade today, wanted to know what's your BTST idea for our viewers?
So two buy calls. Manappuram Finance is looking extremely attractive. The stock breaking past about the series of resistances around the 195 to 200 range, crossing 200 moving average, as well as on the back of much higher volumes. So look out for 206 as an immediate target, revising the stop loss to 195. And the second would be a buy on Bank of India. 3 successive days of very strong price gain for Bank of India, and the stock is now on the verge of breaking above its 200 DMA. 118 could be a near-term target. Stop loss at 105.
Okay, Shrikant, what about your BTSC trade ideas?
If we go through with few sectors from the apart from this particular BFSI space, then we like in that Hindalco, which is currently trading around some 586, 587 levels. From here, the stock can move to the next levels of maybe 605, 610. So Hindalco at current level is a buy with a stop loss close to 578. We also like a few railway companies and stocks which are belongs to railway sector. Most of these stocks are forming higher bottom as well as they are crossing their immediate highest level. So based on that, RVNL at current level looks promising bet, which is around 428, 429. Here I'm expecting target of 450 and we can keep stop loss somewhere close to 418. So I think the risk reward ratio is quite favorable.
That's the take coming in on the BTST ideas coming in from Shrikant as well. Lastly, actually, before we wind down, Siddharth, I wanted a quick view from you on the fertilizer space. How is it looking in anticipation or while we are heading towards the budget?
Yeah, I think fertilizers generally buzz before the budget in anticipation that the government could look at increasing the subsidy allocation, plus any increase in allocation towards the rural farm sector that is also taken as a positive for the fertilizer sector. On its own, I think they have done well in the last few years. And a good monsoon has also helped the space. What we like within the fertilizer space, Coromandel International is something that we like and is our preferred pick. You have a lot of PSU companies, for example, RCF, FACT. However, they are not in coverage as of now.
Okay, so that's the take coming in. The fertilizer stock, of course, they have been going through a huge downtrend. In fact, the entire chemical space, to be honest, the industry has been seeing a bit of a cyclical, down cycle, but hopefully out of the woods. Last 1.5 minutes left. So on that note, we'll thank all our guests for joining us on the show, Siddharth, Shrikant, as well as Kunal. But just winding down for the trading session, it's been a decent set. I mean, 23,150, not at the highest point of the day, but just near about that. And the advanced decline ratio is really healthy, and that I think is the biggest talking point, given the fact that there was that acute carnage as well as the broader markets is concerned. That seems to be bottoming out. There's buying at lower levels. Today, of course, it was auto, it was IT, it was a lot of result reactions that were doing the trick. But I think apart from FMCG, Cheryl, most of the sectors were holding to the green.
Absolutely. Most of the sectors were holding on to the positive territory in trade today, given the fact that, yes, we are trying to recover from those lows. Take a look at some of the counters which have just come out with their earnings today. You have Ambuja Cements that had come out with their earnings. You had Maruti Suzuki, which is down and out in trade today. Let's talk about ITC Hotels, because that one actually listed post the demerger from ITC. So you have ITC Hotels that saw muted set of opening, and 4% downtick is where it is closing at in trade today. Deepak Fertilizer, yes, you've seen the fertilizer pack actually a pretty upbeat ahead of the budget, and 13% uptick coming for Deepak Fertilizers on back of their earnings. You also have Team Lee's, Westlife Food World that have come out with their earnings in trade today. Along with that, you have Adani Power also that is actually moving on back of its earnings. But right now, as you can see, we're winding down for trade today on a positive note, and it's a healthy market breadth as well, Anisha.
Oh, well, yes, but tomorrow morning can be a different story. The Fed outcome, plus, of course, what happens to a lot of earnings, all of that will be on mind of investors. But with that, we're wrapping up this edition of Closing Trades from the entire team. Thanks so much for tuning in.